General journals are used to document the transactions of a business. It allows the business to keep a record of where its money is spent and where its funds derive from. When recording in the general journal, debits are recorded on the left side and credits on the right. An increase in an asset, expense, or dividend is recorded as a debit and a decrease as a credit. An increase in a liability, equity, or revenue is recorded as a credit and a decrease recorded as a debit. For example, if a company purchased $3,000 worth of supplies with cash on the 30th of May, this would need to be recorded in the general journal as follows. The supplies would be recorded on the debit side of the journal as it is considered an increase in an asset, whereas the cash would be recorded on the credit side of the journal as it is considered a decrease in an asset. However, due to the fact that we follow an accrual-based system of accounting, meaning that revenue is recorded when earned and expenses recorded when incurred, as opposed to when cash is received or paid, the need for adjusting journal entries arise. Often the recording of an expense or revenue does not coincide with the exchange of cash, so it is recorded as an accounts receivable or payable. For example, consider the company bought the same supplies on credit. The initial entry would read debit supplies, an increase in an asset, and credit not cash, but rather accounts payable, representing an increase in a liability. However, when the company then pays off the debt, the following journal entry would need to be made. We decrease the accounts payable by debiting it, representing a decrease in a liability, and we decrease our cash by crediting it, representing a decrease in an asset.